Hello, I'm David Morris. The news this week that China's economy grew in 2023 by above 5% was a surprise to many. This was roundabout what the Chinese government was aiming for. But of course, we know anecdotally and from talking to businesses across China that times are tough. People are doing it tough. Businesses are really struggling across much of China because China's going through a structural transformation. It is slowing. The growth that China enjoyed for the last decades, quite often double-digit growth, is just not going to continue at that pace that we were all used to for many years. Of course, we know that in the COVID period, the Chinese economy, like everyone's, suffered, but China in particular chose particularly strong measures to slow the spread of the virus. That had huge economic impacts. But in the long term, it's really the structural transformation that is changing the shape of the Chinese economy. And there is an aging population in China. There is a change towards less capital-intensive industry, and there's a move towards consumption-based economic activity, although I don't think China has yet succeeded in moving as far towards consumption-driven economic growth as it would like. So it's still in that process. But at the moment, there's also a serious problem that China is grappling with, debt problem and a property bubble, fears of a property bubble bursting. Property values are dropping all over the place. There's been overinvestment in real estate and in big capital projects, but also private residential real estate. And so the transformation that China's going through is a policy decision, a policy choice by the government to slow growth for a period of time so that debt can be brought under control and so that the property bubble doesn't burst. So it's an interesting observation, I think, that is often missed, that this is actually a policy choice. It's a policy decision to see some slowing of the growth rates that we've seen in the past. Now, the good news for China is that it has some capacity to manage these problems. So it has the capacity to manage its debt much better than many other smaller internationally exposed economies have, because China's debt is domestically held. That means it can pay it off more easily. China has very large domestic savings. Now, of course, the downside of that is that China isn't spending enough, that people aren't spending enough in the economy. But when they do start to spend again, that will help economic activity to pick up. Also, China, of course, as we know, has large current account surpluses. And so as a result of that, it has amassed a large foreign exchange reserve. So that also helps China to manage its debt problems over time. So it's not impossible that China can get through this difficult period and still see significant growth in the future. There are large areas, especially in Western China, that still have yet to go through the dramatic development that the major cities of China have now completed. So there'll be a lot more growth to come in China. And of course, China's economy, as it transitions to higher value industries, will also see, I think, some significant growth in electric vehicles, in renewable energy, in all of those new economy sectors where China is investing heavily, where these sectors are very successful to date. They won't replace the scale of the big capital-intensive industries of the past, but they'll be significant growth drivers. So the green transformation will actually help to position China very smartly for the future. So complicated times, difficult times, I think, for Chinese businesses, but in the long run, I wouldn't count China out. I think we can still see some significant growth to come, and of course even smaller amounts of, smaller numbers, 5% growth last year, even if numbers in the future were to be even less than 5%, that's still a 5% growth of a huge economy, the second biggest economy in the world. So as long as China's growing, it's still impacting on the world economy, it's still contributing to global growth.